Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Ace Chapman. Thanks for being on the show, Ace.
Great being here.
Ace is a chief executive officer of Freedom Internet Group Incorporated. He's been purchasing businesses, including websites, to create income streams over 16 years. He's spent years developing contacts with the right people. His focus is buying and selling businesses, and he's a business acquisition specialist. And Ace, thanks again for being on the show today. And I thought it was it's unique, your type of business and how it could relate to what we do in the syndication business. And because really, when we were talking about it before we started, I was thinking about how we are also in the business of buying and selling businesses. And so I feel like you're going to be able to provide a lot of value to us in this business as well. But give the listeners a little more about your background and what your focus is right now.
Yeah. So, one of the things we were talking a little bit about before we jumped on was this whole idea that 99% of the content out there when it comes to getting into a business is all about how to start that business from scratch. So, kind of go back about 17 years now to my very first acquisition. And it wasn't like I set out and had this idea that I could even buy a business. I started this conversation with a company that I did end up buying just to become an intern with them. Because I was a user of their service. I loved what they were doing and just thought the product was awesome. It was a stock market simulator that just allowed you to kind of play in the stock market using virtual money. And this is back in 98, 99, so that was kind of novel. And I reached out to them to intern, found out it was a young guy that owned it. And he was like, hey, I've moved on to another project. I want to find a buyer for this. And I'm a broke college kid. I'd saved up a few $1,000s from the summer before, but I was really curious about what this thing was making and how it was doing. So it's generating $60,000 a year. He only wanted $70,000 for it. And not knowing anything about valuations, the thing that I did know was that while I was on scholarship, the great majority of all the other students were paying upwards of $130,000 for those 4 years. And the average person that I knew that was graduating was getting a job at $30,000. So I'm like, okay, $130,000 to make 30 working a job, or buy this business for 70, making 60, that is a great comp, kind of taking the real estate language. It's like, hey, that's a pretty good comp that, tells me this is maybe a good deal. So ended up negotiating for him to finance half of it over a course of months and kind of learning a little bit at a time. Then had a buddy of mine who put up $10,000. Then to make up the difference, I ended up taking out credit cards, which is not something I recommend anybody do, but it did end up working out for me. And so got that first acquisition. I vividly remember checking my bank account and like seeing the money go in. It was like, wow, like I just bought this business and it's actually making money. I wasn't scammed.
Wow.
So
you were hooked then, weren't you?
Yeah. That was, I ended up leaving school, but that was the start of this path. And I think it's interesting that, when we think about something like real estate, at the foundational level, we know the basics. We know that, you can go to a bank, and even if you're not an expert, there are these things called mortgages, and you fill out an application, to figure out the value. There are these people called appraisers. You're probably going to get an inspection. If your parents didn't buy a house, maybe an uncle or somebody, like you knew that process. The interesting thing when it comes to buying and selling businesses is that it is a whole new skill set to learn. And that's what I've spent a lot of my time doing, is kind of teaching people that and then investing in the deals that they do.
Great. Well, I've got a lot of questions about, buying a business and specifically, because that's what we're doing when we're buying apartment complexes, or whether it's self-storage or whatever it is, it's a business. And It's one reason I really like the syndication model, is because we're, the business, our, uh, the value is based on us improving the business model, in some way. And so we look for that business that we can improve. And so anyway, it's a neat correlation. But, I thought about the way you left school, like that was a big step of commitment, at that time. And I even think about now about people starting in this business or even buying a business, about being committed. And obviously you were very committed to say, I'm done with school. This is the direction I'm going. It was like no turning back. Was your thought process then? And did you have support from family to do that?
So the funny thing is, I wish I could say I made that decision and it was something that I just vehemently believed in. The truth is, I was growing the company. Over the course of the summer, it really grew a lot. And I had some investors that wanted to invest, and they were like, we want to invest, but if you're going back to school, we're not going to invest for like this part-time CEO. We want to invest in a full-time CEO. And it was a struggle, and I knew my parents were so into education. And I think you also have to rewind to a time where the internet was this new thing. I mean, just my parents didn't use the internet. And so, here I'm running this business, it's making money. I have investors, and I go to my parents and I'm like, hey, I got this tough decision. Was really planning on them telling me, no, you can't quit school. And then honestly, that was going to be my easy out. I wanted them to say like, no, and so that was their initial reaction, was like, no, like, you can't quit school. Are you crazy? You got a full ride to a top 20 university. You're out of your mind. And I was like, I agree. So then they're like, but why did these investors want to invest in this thing? Like, that doesn't make sense. Like, you're not making real money. And I'm like, what do you mean I'm not making real money? I'm like, yeah, I'm making real money. And they're like, no, you're making internet money. And so the interesting thing, like, my dad invented Bitcoin before it really existed, because he was like, we have a virtual currency in that stock market simulator. And so he thought when I was telling him these numbers, it was funny because even that summer I was flashing back, and he would every day, all the time, just be like, you need to get a job this summer so you can save up money. I'm like, Dad, I'm making money. And in his mind, he's like, yeah, you're making this play internet money and you're not making any money. And so when I would tell him like, oh, we did 10 grand this month, he was thinking I'm talking about this imaginary money. I'm like, well, Dad, why would I tell you that? So we get to the end of the summer, and he tells me, he's asking me these questions, and I'm telling him like, no, when we just made 20,000, it was our biggest month ever, and got a check from a company called DoubleClick. And he's like, so you're saying when you're telling me you're making 10,000, 20,000, that's real money? Like, where are you putting the money? I'm like, I'm putting it in the bank account. And he was like, you are being scammed. We have to figure out like where this money is coming from. Like, we get in the car immediately. We go to the bank, walk into the bank. I had one check with me that was like 14,000 or something. He hands that check to the bank, and he's like, my son has been coming in here depositing these checks that come from some random people on the internet, and he's gotten caught up in some kind of scam, and we just need you to figure out what's going on. So she calls, and it's like a $500 million company, and they're like, yeah, they're good for the money, and this is real. So we get back in the car, and my dad turns to me, he's like, you're thinking about going back to school? Like, why would you go back to school right now?
Wow.
So yeah, that was that transition. I needed that push.
So tell me about how you got those investors when you were brand new to this business and you were so young, because everybody starting in this business, has to do that same thing, or they're looking for investors and looking for, people to partner, in their deals. And, we're all in the capital raising business for syndicating deals. So, how did you find those investors?
It's funny. It's something that I still do to this day. A big part of attracting investors is telling your story. So, I had gotten a news article and, that kind of thing locally, just talking about what I was up to. And honestly, didn't have a vision for raising capital. We were making money, like I mentioned, didn't really need it. And so when people reached out, I was just excited to have people that were interested in this stuff. Mind you, I went to school in New York, but my home was Chattanooga, Tennessee. There was not a big tech scene in Chattanooga, Tennessee. So I just didn't have anybody to talk to. So the people that would reach out to me, I would engage them in conversation and update them on what was going on and let them in on the insides of the details of the company and growth and all that. And so I had these group of people that I was doing that with. And I remember one of the guys asked me for out to coffee one day. And he basically was just like, hey, do you need some money or do you want some investors? And I was like, yeah, I mean, I think maybe we could, improve the site and that kind of thing. And he was like, so how much money would it take? And I remember I told him probably about 100,000. And he was like, all right, I'm gonna write you a check right now. And I'm like, wait a minute, what? Like I can't take a check right now. But it was almost like a launch where you're kind of, when you do these internet marketing launches, you're kind of dribbling out a little bit of information. And I mean, I wasn't doing it on purpose, but now when I'm training, it's awesome. I have a client up in Canada that just it raised quite a bit of money, like more money than he can even use right now to do deals. And he's somebody who adamantly, before we started working through our process, which includes like building a blog, connecting with targeted people on LinkedIn, the types of articles that you share, blah, 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 all this basically funnel for investors that we build. Before we did that, he was like, no, like I've never sold anything in my life. He's one of these guys who's been in corporate America, just never sold anything to anybody. He's like, nobody's going to invest in me. And, so you have those kinds of stories and it really is just following that process. I think the big mistake that people make is they introduce the deal and then want to raise money at the same time. The other thing is on the back end, just like a launch, you have this deadline of, once you get people that are interested, you're just presenting the opportunity. It's not a hard sell. And the other thing that we like to do, and I think this is something that's crucial for real estate investors, because most of the time you're going to do multiple deals, and it's understanding what the person wants. So even when they say no, the average person that has an investor that says no, they just go to the next person. But instead of just saying next, the better thing is to dig into it. Like, what don't you like about this deal? What kind of deal would you prefer? How could I structure this deal so you're more interested? And you start to build those notes and build almost like a CRM around all your potential investors until you get to the point that one day you do have that deal that matches all of their criteria and which deals to introduce to which investors. So a few tips.
It really took a turn here that I wasn't expecting. It's just that your expertise also in helping raise capital. I mean, that's awesome. But yeah, it's so relevant. But I liked how, when you were sitting in that coffee shop or wherever, with that person, like you weren't expecting, you were that capital to be there, or you weren't trying to raise capital. You were just excited about your business, and passionate about it. And so, he could see that and it probably excited him too. So you weren't trying to make a sale. That's a big difference.
Yeah,
so,
it really is.
Yeah. And Ace, you're buying and selling numerous businesses, and, I'd like to know like what you're looking for in a business. So, like as syndicators, obviously we want to have our these properties positioned in, 5 to 7 years, 3 years, whatever it is, whatever our hold period is, have it ready to sell, and have that business ready to put on the market and be marketable to the next team that's going to be interested in it. And maybe you could help us in, what you're looking for when you're buying a business.
So the first thing is profitability, which is something that, I think a lot of people have misunderstanding about like buying businesses. Our goal is to buy something that is already profitable. And we don't want to get these assets that are distressed or, losing money. So that's number one. The next thing is we like to buy things at a 3 multiple. So that means if the income is $100,000 a year for that business, we want to pay $300,000. And ideally, we want to get some terms. So we're doing a deal right now in the mattress industry. It's a $997,000, basically that's just called $1 million business. In that deal, we're going to pay, it's about $500,000 down. It's generating $300,000 a year. But so we want to pay 3 times earnings, but then we want to have some earnout that ties that seller to us and helps ensure, number one, it's like a due diligence check. Like, hey, just in case you were, there was like something fraudulent going on, you're not going to get the rest of that money. We have this relationship. So you're not at least getting all the money up front. It's got to come from the earnings. And then number 2, obviously that increases our ROI. So if we can pay $500,000 down and generate even after the earnout, let's say that's 25%. So that may be like $75,000. We're getting $225,000 on a $500,000 investment. That's where we really like, that's like the ideal situation. So I just got back from Austin and we got the verbal commitment on that deal. And it's kind of the prime of what we love. Now we have different types of deals, based on size. It'll vary quite a bit, but those are kind of the first 3 things. Then we get into some of the other things that we really like age of the business and those kind of things. But the first 3 is it making money today? Can we get it at a 3 multiple? And can we get some really great terms that protect us on the downside and skyrocket our ROI from the normal 25-30% annually to more like a 50-60% annually?
Nice. And could you elaborate on you said we want to have an earnout that ties the seller. And I know you talked about that a little bit, but I just thought maybe you could elaborate on that a little bit.
Yeah. One of the things that's great about this space is that, I've done a lot of real estate deals, and sometimes it's tough to get those seller finance deals. And it's more of just a standard that there's some kind of seller finance because you need that seller. You need that seller on board because there's certain things that even if they give you 30 days or 2 months of training, 6 months down the line, you're gonna go hit a wall and realize like, oh, I didn't ask them about this. And you need them to still be interested in the success of that business. So most of the time when you're gonna sell a business, you're gonna structure it so that person is tied in. Now, the other thing is what we like to do is we don't wanna just tie them in on a seller finance note, because we have to pay that regardless of if the business is doing well or not. So what we do is we structure it on an earnout. So they're going to get a percentage of the earnings. If the business isn't doing well or if it's not making any money, then that's what their earnout is going to be. It's going to be the same amount we're receiving. Goose egg. If everything is doing well and the business is exploding and growing, then they're going to get paid out a lot quicker, as they should. So it's creating this win-win relationship when they've got some upside with you, but most importantly, you've got them as a person that's tied into that business. And I've seen it. I've seen it with clients when they tried to deviate from the type of deal that we like to do. And I know you see this in real estate when you have that person and they just want a deal so bad that they do a bad deal. And, I've got actually a guy right now, I just paid too much up front and the seller isn't helping him. And now he had to go back and hire the seller and pay them additionally to get the help that he really needs. And so I stay away from those kind of deals. I had one deal that was like the worst deal of my life, and it was the one time that I paid all cash up front.
Wow. Are you tired of answering emails from investors about when they'll receive their K-1s? Let the real estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestateCPA.com/syndication. I appreciate you explaining just that earnout too. And I wanted to ask, like, how are you convincing the seller to accept, like, I guess you could call it like an earnout provision or whatever you call it. When really, somebody new is coming in to run this business, and so then, I know you, like, on your side as the buyer, you want them to help you to be able to operate this business and learn from them for as long as you need. But on the seller standpoint, how does it benefit them to be, taking an earnout or percentage when, new people are running the show? And if it was me, I might think, well, somebody new coming in, they may just blow the business or not run it as well as it should be.
So there are two factors in that. Number one is you want motivated sellers. This is something that I learned from we bought a homevestor business a few years back. I say a few, man, it's been 10 years. Goodness, time flies. So we did a deal on that. I guess it was more like 2006, sold it in 2007. And in that business, the thing that they did a really great job of is they had the billboards that said, "We buy ugly houses." And they generated a lot of sellers. And we would talk to 100 sellers a month, and we would find those 3 or 4 out of that were motivated. And I really took a lot of those processes and put those into my buying business. And that's what I always tell people. Number one, you've got to be in the business of buying businesses if you're going to come into this space. And then you're looking at it like, all right, I'm going to generate a lot of deal flow. I'm going to tell a lot of people no. A lot of people are going to tell me no. I get plenty of people that are like, "Are you crazy? Why would you give me this ridiculous offer? I would never take an earnout, blah, 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 blah." You're going to have all of that. We're looking for those 3-4% of motivated sellers. And we're getting told no, we're telling people no all the time. The second part, though, which is a bigger part of what you're saying, is a lot of those sellers may come in and they're worried, like, "Hey, are you going to really be able to perform?" Right. Now, it's one of the reasons that you want to present yourself as being in this business, and you want to build up a track record. So for my team, we have a really great track record. Done over 150 deals. We know that about 8% don't work out, and those are really great numbers. So that helps out a ton. But for that person that is just beginning, just like I was years ago, that don't have that advantage, the thing that I also push is, it's my job, number one, to communicate to that seller what my skill sets are, what my background is, kind of what I'm willing to put on the table as far as my risk, and then that I'm passionate for their industry or their business, and that it's my job to kind of show them who I am and that I'm ready to run this business. And a real key indicator for us is if that seller, after learning all of that, and this even happens for me, if that seller, after learning all of that, says, "I don't think you're going to do well at this. I don't think you're going to be able to run this business. I don't think you're going to be able to run it well, and I'm not willing to participate in it with you." Even though, because like I said, we're putting in a chunk of money, so I may raise some capital, whatever. But even in this deal that we just talked about, we're putting in $500,000. So it's not like we're coming and just saying, "Hey, just finance the whole thing for us." I do plenty of deals that are 100% finance, but I'm giving something to the seller. So if they're saying, "Hey, you do obviously have a dog in the fight. but I still don't think that you're capable of running this business. They know the business way better than I do. So I need to listen to that and go to the next deal.
Oh, that's interesting. I like that. No, I really appreciate you saying that too. Just, yeah. And also you talked about, you would look at hundreds of properties and you'd only buy a couple, and, we can definitely relate to that, but then communicating well with the seller, so they understand your skill sets. And I would think a lot of times, even trying to purchase real estate, that's not really something I'm focused on. You're just looking at the numbers and why this property is worth certain things, or a lot of people try to get seller financing, but they're not convincing the seller that they're a qualified operator.
Yeah. Yeah. So we take the seller through a process that, number one, we build up an image around so even with my other business buyers that are clients, I want them to have a kind of public figure image, and, their website needs to be the right way, and their phone number, their email, everything needs to be professional. Same way that a professional real estate buyer would come in, and, we start with that. And then even with the seller, we basically put them through a funnel where we're showing them, unlike on both sides, the worst thing that can happen to me, whether I'm selling a business or buying a business, is that I'm the very first person they ever deal with, and they want to do a deal with me. I tell brokers, like, hey, make sure if you're bringing me a deal, make sure they get on the phone with some people before me. Because they're not going to be able to appreciate the professionalism on either side unless I've given them the chance to experience what it's like to deal with the other people.
Yeah. And maybe give us a couple of quick tips about just presenting ourselves as professional as possible.
So we talked a lot about the buyer side. So let's talk about the seller side, because, we may have some folks that eventually get to the point where they buy something they're ready to sell, or they have something right now they want to sell.
Yeah.
So when I'm sitting across from a seller, one of the things that I want to do is get them to open up to me about what their concerns are in the business. So they may sit across from me and they may say, my biggest concern is that the manager is going to leave because, I don't really have time. I'm not interested in running the business, and they're really great and things are awesome right now, but what happens if they leave? And what I want to do is, in that case, I'll bring out our SOPs and show them, go over to employee, go to manager, show, hey, this is, when the employee leaves, these are the employees that will step up. These are the 3 positions. One will do this aspect of the managers. This one will do the scheduling. This one will do that. And so that gives you some time to go out and find the manager. In order to find the manager, here are the places that we advertise. Here's the exact wording of the ads that we use and the qualifications that we look for. Here are the interview questions that we go through and some of the things that you want to hear from that person. And then once you've hired somebody, here's all the training that they need to go through in order to be just as good as Melissa, the manager right now. So it's giving them that vision and quenching their kind of like fear of the unknown. And then I want to go to the next thing. What else are you scared of? And they're like, well, I don't know much about marketing. This is going to be my first foray into marketing. I don't know anything about that. So I can go over to marketing and show them, here's everything that's working. Here's the details on it. Here are things that we tried in the past that didn't work. Here's things that I would recommend you try again in the future, and, details around that. So, being able to take somebody through that is powerful for a lot of reasons. Number one, you're attacking, most sellers don't want to talk about the downside. They don't want to talk about, hey, what do you feel like are the riskiest things in my business? Tell me what they want to, and I talk to sellers like this all the time. They want to tell you, like if the person says, oh, I'm worried about the manager quitting, like, oh no, she's not going to quit. She's good. She loves it. There's no reason for her to quit. Like, what if she get hit by a bus? We don't have buses here. It's like just absolutely crazy, just positivity. And it's like, no, like, let's go ahead on with the risk. So that's one side. The other side is you're creating almost like this franchise like system around your business. And the key there, and this is interesting for syndications or anything else, is, there are people that go and they pay $100,000 just for the franchise system of something that's making zero money right now. So they pay the franchise fee. That just gives them some training in the system. And now they've got to go, they've got to find the location, they've got to do all the hiring, do the rehab, they've got to buy the inventory, do a bunch of promotion to let people know they exist now. And they're going through this whole thing, and they paid a bunch of money just to get those systems. So you create a situation where you can sell your business at a premium because you're basically tying those two things together. And I don't want that person to come to me first. I want them to go to the other businesses where they ask for the financials, and the guy just like is going through this drawer of just a whole bunch of junk and paperwork and like pulling stuff. And he's like, well, can we see the stuff from last year? He's like, well, I got 3 years ago right here. And I think I got like this year right here. Like, I don't have last year right now. I mean, we've all been with those people. So I want them to go through 4 of those and then come and have a seat with me to negotiate their deal.
I like that. I mean, you're setting the next person up for success.
Exactly. I'm setting myself up to be able to sell at a premium.
That's right.
And improving the likelihood of their success and making them comfortable. Honestly, if I could buy a business the way that we set up a business to sell, I wouldn't need as much earnout. So now when I'm selling, I don't have to give as much earnout because I'm the only person in the market that has kind of set the business apart from everybody else. And so I'll have a bunch of demand, which on one end makes me not have to do the earnout. But then on the other end, it's just not as needed because I really have given them everything in the SOPs.
All right, Ace. We're about out of time, but I want to ask you a few other questions. Is there a way that you've recently improved your business that we could apply to our business?
All right, so yeah, we can do rapid fire. I do see we're running out of time. So one of the things that I am doing this year that I have just been heads down for the last few years, and we're taking a company public this year. And so I'm spending a lot more time going to conferences and networking and that kind of thing. And, after just this first month of the year, having gone to 3 conferences, it has been
you sound like me.
Yeah. It has been very obvious that, while heads down had its benefit, I definitely missed out on a lot of opportunities and just just already have generated some partnerships and some things that I'm really excited about. So that would be one thing. Get out of your house, go to conferences, network with folks, and find those strategic relationships. Not just go and have fun, but like really seek out those strategic relationships that can explode your business.
What's the number one thing that's contributed to your success?
I think being willing to take risks and try things and just embracing that fear. I think that some people feel like when you're one of those people that takes a lot of risks, they're like, oh, like that person just doesn't have the same fears that I have because I'm scared to do that. It's like, no, that person has those same fears, the same stress, waking up in the middle of the night, it's all of those things, but they just are willing to act and not give in to that fear.
No, I really appreciate that answer. Well, I can relate. So what are you excited about in your business right now? What's the next thing, or what's a goal or anything that's coming up?
Yeah, biggest thing this year is going public. It'll be under ticker symbol Fiji, FIGI, Freedom Internet Group, like you introduced. So that's been a transition. I just kind of switched a lot of my focus and everything over to that company because we are going public. So that's a whole new. I've never done that before. So that's a whole new thing for me.
Wow.
Is kind of having a group of companies that we take public.
That's exciting. And is there a need in your business right now that you'd like to tell the listeners about?
What is a need? There's always a need. The biggest need is a deal flow, finding really great deals. So, I know you've got some listeners that are out there combing the streets for potential deals. So if they come across something that may be a business and they're interested in selling, I'd love to talk to those folks.
Great. And tell us how you like to give back.
My favorite thing is my dad was a minister. He passed a couple years ago and ran a ministry called Inner City Ministries. And that's one of my places, just growing up in the inner city. One of the things that we're trying to do is improve the tutoring and help for kids that just, when they go home, their parents aren't there to help them with schoolwork. Whether it's because they're working late or they're just not interested or whatever. And I think that's a missing link. And so getting kids excited about school, but also just helping them. Just have a lot of stories. But yeah, just have seen a lot of kids that they get, number one, they get passed along. Number two, they get disinterested because they don't have the help that they need, and nobody wants to suck at something. So if you're sucking at it, you're just like, okay, I'm not going to try that anymore. And so, yeah, that's something that I'm passionate about.
Wow. No, I like that a lot. That's great. And Ace, thank you so much for your time and being on the show today. I really appreciate that. How can the listeners get in touch with you and learn more about you and your business?
Yeah, so ace@acechapman.com. You can feel free to email me directly. If you're looking at deals, have questions on deals, any of that, feel free to connect with me on Instagram. It's ace.chapman. And then I've got a lot of free training and videos on YouTube. You can just search Ace Chapman and put together what a lot of people consider a course on this stuff. It's a 4-part course that I did with another guy, webequityshow.com, and it goes from beginning to end, how to find deals, how to do due diligence. So that you can check that out.
Great. Thanks again, Ace. I hope the listeners will also go to LifeBridge Capital and connect with me and go to the Facebook group. So we can all learn from experts like Ace and grow our business together. We'll talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.